Okay, so thank you and welcome to our annual general meeting today, and thank you to Jackie and Abkul for hosting this online meeting for us. Move on, Jackie. Here's today's agenda. Routine with a number of motions through the meeting. You've seen how to vote. Hopefully all that sort of works smoothly for you. I think we have all of our board of directors present today. We've got no apologies. So shall we move on to the minutes of the last AGM, which was held on the 31st of January last year. And it's a long time ago. The minutes have been on the pack of information for today's meeting. So are we happy to approve those minutes? Move to the vote.
We've now got 55 members online. Just leave this one here. 79% have voted yet, but I think we did get up to a little bit higher number. So if anybody could place the votes for this AGM meetings for the minutes to be approved. So we've got 85% of members that have voted. It's just gone up to 87, 89. Yeah.
So I think that's the minutes approved. Can I just, if anybody is having any issues voting, if you've come into the meeting late, could you
just pop it into the question tab, which is on
the question box? It's the little box at the either the top or the bottom of your screen with a question mark on it. If anyone has joined us late and can't work out how the votes work, just please stick a question in, because I think we've got some slightly more important votes to come later in the meeting. Just want to make sure everyone's fine on that. Okay, thank you.
Okay, so I'll just show the results.
Next slide. Okay, it's time for my report for the year. It's been a strong year for the credit union, supporting even more members this year to improve their financial well-being through savings and loans. We've attracted almost 1,000 new members, providing loans to half of them, and we've seen both our sort of savings balances and total member numbers growing as well. We can't say yes to everybody, and we know that these are difficult times for an awful lot of people in this country. But within our website, people may have seen that we've now introduced a money toolkit, which includes some practical resources such as a benefits calculator, budget planner, and savings calculator to assist with members being able to receive their entitlements and perhaps work out their finances a little better. We're proud that we have continued to prioritise those with the least reserves and most at risk of financial vulnerability. That's what credit unions are all about, and our impact report, which is available online, demonstrates the difference we are making. Looking ahead, we recognise that our success in supporting those struggling must be matched by the growth in what we offer to our wider audience of borrowers and savers. And that's why this year we've relaunched our regular savings product, Saver Plus, paying 4% interest currently. I'm not quite sure what's happening. We don't know what's going to be happening in the world of interest rates over the coming year. But it's currently paying 4% interest on savings of up to £250 a month. We have embedded our new brand identity. You'll see it working there on all the slides today. And if you're using the website regularly, you'll see it all there. The Money Co-op was first introduced at last year's AGM, and we've launched our new website and a mobile app. The refreshed brand and marketing communications have been well received and provide a platform to reach into the wider social economy and retail sector. And we were delighted to welcome several new payroll partners during the year, further expanding our reach. We as a board also recognise that the future of UK credit unions is increasingly about joining forces to create stronger, more resilient organisations. By combining resources and expertise, credit unions can deliver better products, improve digital services, and greater financial security. These partnerships are not simply about growth. We are competing against much larger financial institutions with much greater resources than ourselves. These partnerships are about protecting cooperative values that matter the most, ensuring members continue to have access to affordable loans, safe savings, and community-based support. With that in mind, we are pleased to report the successful completion of our first merger with a smaller credit union, Unity, based in Manchester, which strengthened our financial position and provided valuable learning for the future. Building on this success, we are now seeking the support of our members for a further strategic merger with Metro Moneywise Credit Union, who are based in Rochdale, the spiritual home of the cooperative movement. This represents an important opportunity to enhance member benefits, increase resilience, and ensure the Money Co-op continues to grow sustainably while staying true to its cooperative values. More on this is coming on our agenda later. And finally, this is my last chair's report to you, as today I stand down from the board at the end of my terms of office. I've been involved now for 9 years. It's been a great privilege and pleasure to lead the credit union over the last few years. I've worked with some great people, staff, members and directors to develop our credit union. Our membership has grown. We are consistently lending to over 2,000 people every year. We've developed our IT capabilities to put our website and online services on par with much larger organisations, and we have updated our brand identity to the Money Co-op, giving us a modern, relevant look to present and future members. None of this would be possible without the hard work and dedication of our staff team, the commitment of our volunteer directors, and the support of our valued partners, from Co-op employers, to the technology suppliers who make our services possible. So to everyone who contributes to our goal of financial well-being and resilience, we extend our sincere thanks. So thank you all. I'll now pass over to Grant with the Treasurer's report.
Thank you, David. The full accounts are available on the website and also I think in the meeting materials. But I'll just take you briefly through the highlights of the accounts. So this relates to the financial year ending September 25, so the 30th of September 25. Our financial year runs October to September. In the year, our surplus increased to just about £50,000 compared to £9,000 the previous year. The main reason for that being improved loan impairment costs, so lower bad debt impairment. In terms of the size of the balance sheet, that's pretty stable year on year. New lending was stable at 2.85 million. The overall size of the loan book reduced very slightly, but 3.5 million, pretty much similar year on year. The other side of the balance sheet, the members' deposits increased to 6.2 million, which is 3.5% growth year on year, so slightly up on that side of the balance sheet. But overall, pretty stable. As I said, the main reason for the improved surplus was loan impairment costs improving. So the previous year we had £105,000 of loan impairments, whereas in the latest financial year that fell to 57,000. So a much improved position there. We did invest significantly in the year in the rebrand, the new website, but that was funded by a grant from Fair for All Finance, for which we're very grateful. Meaning we didn't have to dip into our reserves to cover that. That was funded by that grant. Two ratios at the bottom are the key things we measure from a regulatory perspective to indicate the financial strength of the credit union. First one is the capital ratio, which says what proportion of our assets is free capital, so not attributable to individual members in terms of their shares, but free capital. The regulatory requirement for a credit union of our size is 5%. We're well over that with a ratio of 11%, so that's very strong. And similarly on the liquidity ratio, so this is about how much ready access to cash we have. The regulatory requirement is to have at least 10%. We currently have 33%, so again well above that regulatory requirement. So a good year and a very strong financial position as far as the accounts show. That's the highlights of the accounts. If anybody has questions on the financials, please type them into the chat whilst you're doing in the question box. Sorry, whilst you're doing that, the accounts have been audited by KM accountants, our auditors. I'll hand over to Mark Heaton, who's their managing director, just to give comfort on the performance of their audit.
Yeah, good afternoon, everyone. Yeah, we've completed the audit of the accounts, and the audit report is in the accounts, and we have no concerns to bring to your attention about the financial information that is provided and the controls that are working within the society.
Thank you, Mark. So I'm not seeing any questions on the financials coming up. That being the case, I think we now move to two votes. One is a vote to formally accept the accounts, and then the second, the board proposes that we reappoint KM accountants as our auditors for the current financial year. They've been in place now since 2020. We did, as a matter of good practice, review the fact they've been in place for 5 years, and were we still satisfied with their performance and so on. And the board concluded that we are very satisfied and wish to propose their reappointment. So there'll be two votes on those two coming up in just a moment.
Just a quick question, Grant, that's come in. Does the high liquidity percentage miss income from investments?
It's a good question. The liquidity varies from month to month depending on just the cash flow of when money comes in and goes out and so on. 33% is which is what it happened to be at the end of the financial year, is higher than we would normally have. The regulatory limit, as I said, is 10%. We normally aim as a board to maintain it about a little over 20%. That's our sort of target. At the end of the financial year, it was slightly above that, and that does give us opportunity to potentially reinvest some of that cash into high yielding investments. But we do, as part of our sort of regular financial monitoring, keep track of where we think the cash flows will go over the next few months and whether money's due to flow out. And if we think that high liquidity position is sustained over a period of time, we would look to invest that money.
Thanks, Grant. Okay, so I'll put the poll up for the first audited accounts. So we've got 60 members with us. I think we got up to 88% last time, so we'll just wait for that magic number. So 87% of members have voted, and it's a majority yes for the to approve the audited accounts. Are you happy with that vote to close?
Yeah, thank you very much.
Okay, I'll show the results.
So thank you for approving the accounts, and then, as I mentioned, the next vote will be to reappoint the auditors.
Okay, so 89% again, and it's a majority yes for the appointment of the auditors.
Okay, thank you very much, Jackie, and thank you everyone for voting on that. The final section of my report then is to propose the annual dividend. So the dividend, to some extent, is retrospective, reflecting our performance in the most recent financial year and the surplus we made, and then therefore looking to distribute that surplus to our members in the form of dividends. The board is proposing a dividend this year of 2% of share balances. That's an increase on the previous year. Last year we paid out 1.5%, I think, and we believe as a board that's competitive when compared with sort of instant access savings rates available from the high street banks. We've also, as it says there, we do have the regular saver account, Saver Plus account for those people able to make regular savings and tie that up for a bit longer. That's currently paying 4% annual interest rate. We do discuss as a board how to make sure we strike that right balance between rewarding savers with fair interest rates and dividends, and at the same time supporting borrowing members. So there is a balance there, which is something we regularly discuss as a board. But the proposal today is to pay a 2% dividend on eligible share balances, and that will come up as a vote in a moment.
There's just a comment as well saying a significant increase in surplus. Well done to everybody involved in the accounts.
Thank you.
Okay, so 93% of people have voted for the proposal of the dividend at 2%. And again, it's a majority yes.
Excellent. Thank you very much, Jackie, and thank you to everyone for supporting those various votes. That concludes my section, and I think I'm handing over to Lisa, I think, our Chief Executive.
Thanks, Grant. Good afternoon, everyone. Oh, great, I can see the slides. Yeah, good afternoon, everyone. Thank you for joining us today. It was a real privilege for me to take up the role of Chief Executive last June. Stepping into this position, I've really appreciated the strong foundations my predecessor, Matt Bland, put in place, and I'm glad to be carrying on that work forward during my time here. This year, we've continued to keep our focus exactly where it belongs, on our members. We're continuing to support the people who've been with us for years, whilst also welcoming almost 1,000 new members. And more than half of those new members took out loans, which is a good reminder of why we're here to support members with their finances when they need it. We also saw members' savings continue to grow, which is good news because that growth means greater resilience and more long-term security for the people we serve. It's also been a year full of achievements. We completed a major rebrand and relaunched our website and mobile app, which with the aim of making everything easier and more accessible for members. And we've received really positive feedback from both our members and payroll partners on the new brand and website. We've also expanded our payroll partner network, welcoming new organisations across sectors including social housing, cooperatives, not-for-profits and specialist care services. And as David mentioned, we completed our first merger, bringing Unity Credit Union into the fold. So welcome to any former Unity members if you're joining us for the first time today. And whilst that merger made commercial good sense, it also gave us valuable experience for managing larger strategic mergers, such as the one we've agreed in principle with Metro Moneywise, which we will be covering later in our agenda. We've received fantastic feedback from our members through the year, and a couple of slides to go through that shortly to highlight some of that feedback. And finally, our internal auditors gave us very positive feedback on governance, risk and compliance, areas that are absolutely essential to running a safe and trusted organisation. But honestly, none of this happens without the people behind it. So I want to say a huge thank you to our fantastic and hardworking and committed team. Thank you. I'll now move on to a few slides highlighting some of the feedback we've received. So we conduct a survey of our members each year, and this year we achieved a Net Promoter Score of 71, which is really positive, particularly for a financial services provider. And Jackie, if you go on to the next slide. Thank you. We've received some really great ratings from Smart Money People, which is a financial services review platform. So they collect customer reviews and insights from banks, insurers, credit unions and other financial providers. And it's really helpful for us because it gives us a clear picture of how members have experienced our customer service. And we were delighted to be rated 4.98% overall, which is excellent. And then we also monitor member feedback via Google reviews. Again, it's completely independent, so it's a great opportunity to see how members are to share their experience with us. And again, we're really pleased receiving 5-star reviews, which again is really excellent. And then I've got a further slide to illustrate some of our annual review. So we conduct a review each year to measure our impact. And as with previous years, we continue to make an impact in terms of being able to offer loans to members that might otherwise be underserved by mainstream banking. And then my final slide is a picture of, it's our year in pictures. There's a number of photos there. It's been a busy year for our marketing manager, Mel, who's been promoting the new Money Co-op brand at exhibitions with our key role partners. Which is a really effective way of attracting new members. There's a couple at the start, a couple of quite glamorous photos of some of the staff and directors celebrating the 35th anniversary of Metro Moneywise Credit Union at Rochdale Town Hall, which was late last year. And we've also included these pictures in our annual report, which is on our website now and available for you to review and download if you wish. So thank you very much. That's the end of my report. And I'll just pause now, Jackie, to check in with you if there's any questions. Otherwise, we can move on to the committee reports.
Sorry, I think all the questions will be picking up in the future agenda.
Okay, great. So our committee reports have been included in the meeting pack, which is on the website available to download. But if anyone would like to raise questions now, all our chairs of our subcommittees are online ready to answer any questions.
Yeah, there's nothing coming so far, Lisa.
Okay. Okay, we can. Should we move on then, Jackie?
Yes.
Okay, so in terms of the merger, I'll hand over to David, our chair, to take you through the merger proposal.
Thank you, Lisa. As already mentioned, we are proposing to you a merger with Metro Moneywise in Rochdale. We believe that there are a number of benefits coming out of a merger, stronger financial stability, a wider range of loan and savings options, and improved digital services. We are working with their board on a business plan for the merged entity. To date, we've identified £200,000 of annual cost savings per annum through the merger. I mean, I'm sure as you all realise that there's a whole bunch of services that we have to buy as a small financial institution to our IT, marketing, auditor fees, and all sorts of stuff, and we have to do all the things that financial institutions many times our size need to do. So there will be a lot of sort of cost opportunity coming out of a merger. We've already achieved that with the Unity merger, where we've effectively brought that across without any cost impact whatsoever. It's just the revenue and balance sheet increase for us. So we believe that there's a strong case for doing this. We are both member-focused organisations with shared values and a strong commitment to improving financial well-being. And an important thing to stress to you all is that the combined credit union, if the votes go ahead, will operate under the name the Money Co-op. That is something that will not disappear. It is something that Metro Moneywise are very keen to be involved with what we've done on our brand. Next slide. Oops. Credit union regulations don't permit mergers as such. One credit union must transfer into the other. Due to the relationship between Metro Moneywise, Rochdale Borough Council and the Greater Manchester Pension Fund, we've decided that the merger would need to be completed as a transfer of engagement of the Cooperative Family Credit Union, that's ourselves, our full name, completing a transfer into Metro Moneywise. But as I say, the combined organisation will continue to trade as the Money Co-op. Members will continue to save and borrow as normal. Payroll deductions some of you may have will just continue as normal. You'll be able to manage your accounts online again, through the Money Co mobile app that you've got on the website. And as I say, with the cost savings, we believe there's opportunities that we'll be able to invest in technology to further improve our digital services and the range of products. We hope to complete the merger around the middle of the year, again subject to all your votes at this AGM and a follow-up special general meeting in February. All the boards have agreed and have briefed all staff at both organisations that there will be no redundancies for staff at either credit union. So can we pause for a moment? I think there's, before we go on to the vote, I think this is a very significant vote. It's not a straightforward majority vote for this one. We need to dig our calculators out, make sure we get to a 2/3 figure for approval. So, but first of all, please, if you have any questions, if you get them keyed in now, we'll just pause for a few minutes while you do that. And I say myself, Lisa, and other members of the board are at hand to answer any of those questions you may have.
Mel, do you want to come in, or do you want me to propose the questions?
Yes, go ahead, Jackie. There's a few questions in the question tab there. Thanks.
Yeah, I'll just pick them randomly. So what due diligence has Money Co-op carried out on Metro Moneywise?
I'll take that one, Lisa, or do you want to answer that one?
Oh, sorry, I didn't hear that in full. Jackie, say it again.
What due diligence has Money Co-op carried out on Metro Moneywise? Due diligence.
Due diligence, that's a bit I missed. So we started the due diligence exercise over the summer. We've done it in a number of different work streams. So we had a work stream that covered governance. We went back through the last 2 years, board packs, board papers. A really key one was around reviewing financials. So both sides, we've been reviewing each other's financials, but in particular looking at our loans that are in arrears, because that's so critical to our surplus, and we went into quite a lot of detail with that element, and we're able to even look into each other's accounts to check we were entirely comfortable with that. And in fact, our position in that respect is very similar, so we're quite comfortable with that. I think that they're the key ones, looking at the governance and the financial position, auditors' reports, internal auditors' reports.
And they, of course, have done the same with us.
Mm-hmm.
Yeah.
And then as well as being backward looking, looking at historic packs, we've done an exercise to then look forward in terms of what the cost savings would be post-merger, where the economies of scale would lie, and where the opportunities for growth would be with the increased capital that we'd have as a combined organisation.
Thanks, Lisa. One question. You've spoke about the potential advantages of a merger, which makes sense. Can you also tell us what risks you identified and how these would be mitigated? If any.
So I think with any merger, there's a risk of change. So I think it's around being really clear about, and we've got a merger project in place and a working group that's meeting weekly. Again, we've broken that into a number of work streams to consider the risks. I think throughout the due diligence process, one of our key criteria was about protecting staff's roles and no one being disadvantaged from the staff team. And then I think the only key risk that came up in the whole of the due diligence was around Metro Moneywise pension arrangements, which is why we've made the decision about merging in the way we're proposing, so that both staff on both sides aren't disadvantaged in terms of pension.
Thanks, Lisa. So I'm just clicking that button forwards. Will any of the Money Co-op directors move on to the combined board?
Yeah, we'd be starting from a position. Sorry, Dave, do you want to answer this one?
So I say I'm standing down from the board today. So I won't be, but the rest of the board will be moving across to become directors of the new company. We're going through a process with both boards to to make sure that we're planning for people who need to stand down, because there's other directors who's coming to the end of their terms of office, and working out looking at the sort of the skills that everybody brings to the party, and working out who should take what office on the board, chair, treasurer, etc. So that work is still underway.
One more question. Are both credit union levels of bad debt good?
Yeah, so our bad debt ratio last year was around 3%, and Metro Moneywise was similar, under 3, around the 3% mark, which is low.
Okay.
It's lower than we budget, so it's a good position.
That's great. You've mentioned the staff redundancies, you mentioned the bad debt. When will these cost savings translate into improved dividends? You said earlier that you think the dividend rate is reasonable for the market, but it's nowhere near the best savings interests that are available. How confident are you that this merger will improve the future dividend rate, and has it been quantified?
No, we haven't quantified it. I mean, say if you look at the profit figure for ourselves, Metro Moneywise is a little. I probably can't give. I know what their figures are, but they haven't had their annual general meeting, so I probably shouldn't say anything about them. But their profitability is absolutely fine. But if you look at 50,000 for us, just as an example, if you could take out 100,000, 200,000 pounds of costs relatively straightforwardly, then you'd be able to imagine that this should give us, or would give us, quite a big kick up in our profitability. There will be some costs in getting there. We won't get to a single IT platform and web platform and a single application, app for people's phones and tablets and whatever, without having to spend some money. But I think we're sort of looking at a payback on investments which should pay back within the first year. All being well, it's impossible to predict the future with a great deal of accuracy these days. But we should see a kick up in profitability within the first year, and then embedded going forward.
Yeah, so we've done quite a bit of analysis on the costs, and just at a high level, it's things like, well, we don't need 2 sets of auditors, we don't need 2 sets of bank accounts, we don't need to pay the regulators or their fees twice. So there's from the first year, there's cost savings there, and as David says, in the next year or so, as we integrate onto maybe a single platform, IT platform, set of IT, there's significant IT cost savings as well.
Yeah,
even after you take into account any integration or migration costs, it's still definitely cost savings, or else we wouldn't be doing, it wouldn't make sense to do it.
Yeah. I'm not too sure if this next one's a merger question or a finance question. Where does the Money Co-op position itself compared to fair finance providers such as Salad Money and Fair4You? These providers can raise money via platforms like EFX, which can offer tax-free interest via innovative finance, ISAs, etc., which doesn't seem to be available to credit union members.
I'd need to look into them a bit more to answer the question.
Could you repeat the name? Could you repeat the names of the organisations? I couldn't quite catch that, Jackie.
Salad Money and Fair for You. And they said that these providers can raise money via platforms like eTex. Maybe it is a question that we can take offline and get back to the person that's asked it direct.
Yeah.
Yeah, I mean, we do do treasury management as part of our role, and we use the ABCUL website actually to recommend best providers for where we in turn invest, you know, where we keep our money saved, so we're getting a good return for our members. But we do like to keep our principal protected rather than risk that.
I think it's part of the reason, I think, in terms of why I think we believe, not just for the money co-op, but right across the credit union movement, there needs to be consolidation, because we are really small financial institutions by and large, and a lot of these companies are an awful lot bigger and have got an awful lot of resources behind them. We also we try very hard to sort of find ways of helping people. We might lend money to individuals that an awful lot of people, other organisations wouldn't, because we know them, they're our members, and it's a slightly different relationship than it is with a big financial institution. We also limit the amount of interest we charge on our loans. I noticed, I just noted on the Fair for You website, they're quoting a typical APR of 68%. That's just not. It's an outrageous rate of interest. I'm sure it's not the highest in that world, but there's no way we would charge. I don't think we have any rates. 39, I think, is top rate on one of our products, but typically on our loans, then they're all sub 30. But these organisations have got big private equity backers typically, and got deep pockets. And if the credit union movement is to succeed and is to become a significant part of the UK financial landscape, then we need to concentrate into more powerful, more resourceful credit unions.
Okay.
The only other point on that I would say is that it's a disadvantage really for all mutuals. Effectively, the only way mutuals can raise capital is to make a profit. I think there are technical other ways that sort of mutuals can raise some capital, but they're a bit complex, and to quite a large extent, they actually sort of take away some of the concept of mutuality and member ownership from their organisations. So that does put us at a disadvantage, and it does focus us on the fact that we need to make a profit to add to our capital resources to allow us to lend out more to more members, to more people, more prospective members going forward.
Thank you. One question: are you breaking away from the cooperative movement?
Absolutely not. We are owned by the members of the money co-op, the cooperative family credit union. as was. You are our owners. We're an independent cooperative organisation working to quite a large extent with a number of with cooperative organisations around the country. That will continue. Metro Moneywise are also a cooperative organisation and also members of Co-ops UK. So there's and they will their member base is local government, Rochester Borough Council, and a whole host of NHS trusts around, not just in the northwest but further afield as well. I think we believe that two complemented organisations. It's with a really good fit going forward, and that the heritage of both organisations will be retained and will go forward.
There's one question about the common bond. Obviously, it's going to be increasing. Is the regulator happy with a very broad common bond?
Well, there's a process here. We need to go through this these votes, and when we've got those votes, then we need to ask the regulator. So there's a process. It's one step at a time. So that is asking the regulator's approval on this is step two after we've had our vote today.
Yeah. Many mergers between businesses fail to deliver the expected benefits, often because of differences in culture, which make integration harder than people expect. Have you evaluated this risk, and what is your assessment of the risks it proposes? Sorry.
I said in the last question, I think there is a really good fit between the two organisations, both in terms of the way we operate and the way we do things, and the ethos of both organisations. Staff of our staff and their staff have met with each other, and we've had meetings together. The boards have met on a number of occasions over recent months, and it does feel like this is a really good fit. There will be some challenges. I think the changing technology is never absolutely straightforward, and always, we may find some things more difficult to do than other things, and some things that might, there is a risk that some of these things might cost us more than we thought they would, or take a lot longer to do than we thought they would. But I think that's to mitigate that. I think it's around having a very good understanding of what these issues are, and for the boards and the management teams of both of the, well, until we get to a merger, it's both organisations, and after a merger, post the single board, to work these things through. And I think we've certainly got a number of directors with absolutely fantastic history within the financial services industry, unlike perhaps some of the boards of credit unions around the country. We are blessed with a really strong board with a lot of experience. So there will be some tough things, but I'm confident that with the people we've got at both board level and management level, that we'll work our way through those things and get the benefits of the merger.
And
Do we
just
know
to add to that, Dave, sorry.
Go on, Lisa.
I was just going to say, just to add to that, David, we do have good experience of delivering technology changes like the new website we've put in, and we've changed the mobile app and we've changed the front end, and we've done a good job of that. We've done a merger back in October with Unity and migrated those all over successfully on the right day, and everyone's balances right. So we do have good experience of doing technology changes successfully, which is a bit of a mitigant in itself.
Yeah.
There was just one question about the head office. Will you be moving out to Manchester?
No, no plan to move out of Manchester.
I think that a lot of the other questions were like next steps.
Next steps, basically we keep planning. Both organisations working together. So at every level, board level, management level, and team level, and obviously sort of subject. The votes, Metro money-wise, will be having a vote at their AGM, which happens later this week, and subject to getting the votes, then talking to the regulators and getting the first step of the regulatory approvals that we need before we can do this.
Yeah, and we'll actually be part of the regulatory process is that we ourselves need to have a second SGM, a follow-up SGM after this AGM within after 2 weeks and under 4 weeks. So we'll have a second opportunity to vote.
Yeah.
So I can put the link to the first AGM once the poll's been done, and people can register direct. Just check if anything else has come in. I think Chris has just put a comment saying credit unions must merge to have the size and capability to challenge other lenders. We owe it to many potential members to provide ethical affordability lending on a larger scale than currently being provided. Ireland, Canada, USA, and the West Indies all went through this phase to become a meaningful size and challenge on the high street, which is correct, isn't it?
Yeah.
Thanks, Chris. There's a couple of questions about who'll lead the management in the new looking credit union. I suppose that's questions that will come out after everything's gone through, won't it?
Yeah.
In the immediate post-merger period, will we have equal representation of voting members on the combined board?
So we've actually got slightly more directors than they have, so that we'll have yes, there will be effectively equal numbers at board level, and the membership numbers of both organisations are very similar. So there'll be sort of 8,000 or thereabouts members for both organisations.
Yes, somebody's asking about the Metro Moneywise dividend from last year and how does their historical profitability compare to Money Co-op? I'm not too sure.
I know the answer, but I can't. It's confidential at this stage about where they are. because their AGM's coming up on Thursday. But in previous years, I think they paid a little bit more than we have on dividends.
Okay. So I think Mel's been answering the questions in the background, so I think more or less everything's been answered. We will review all the questions, and if there hasn't been anything answered, then we will get back to you directly. I can run these reports as soon as the AGM is completed.
Okay.
Yeah.
Do all these questions get captured, Jackie?
Yes.
So we can go back.
Yeah, I'll send you the reports as soon as the AGM is completed.
Okay. So if there aren't any other questions, can we move on to the vote?
So we've got 61 people online. The board numbers won't come into it, Lisa. So we'll just give this one another few minutes for everybody to put the votes in. Just leave the vote up to a minute. I've just gone over the minutes, so we've got 91% of members that have voted, and it's majority yes for the transfer of engagements to go through.
Thank you very much, Jackie. Thank you for all your questions. Keeping okay, that's great. Okay, thank you very much. The motion's carried. And as Lisa said, you'll be hearing from us very shortly about setting up the second vote that the regulations require us to have. So through a special general meeting, which we're planning in the next few weeks. So look out for that, please, folks.
Yeah, it has been scheduled. It's the 12th of February, Lisa. And I've put the link now if anybody wants to register straight away. If you just click into that link, it'll take you through to registration for the first SGM.
Thanks, Jackie.
Right, we'll move on now. Yeah.
So I think we've got Nisha to go through the elections.
Yeah.
Thanks, Lisa. Thanks, David. So for the elections, David has mentioned previously that he'll be leaving as he reaches the end of his term and the third and final term. So he'll be stepping down from this AGM. So Grant, who's our current treasurer, will be taking on the role after this AGM. So on behalf of the board, I'd like to thank David and extend our sincere thanks to David for 9 years of exceptional voluntary leadership. His steady guidance has supported us through the pandemic, the cost of living crisis, significant regulatory change, and a major programme of modernisation, including our refreshed brand identity as the Money Co-op. David has been a trusted voice of reason and a strong advocate for our members. We thank him warmly for his service. I'll now take the members through the elections to the board, which this year includes 1 new appointment and 2 re-elections. So in anticipation of David's departure and following a recruitment exercise, Amanze was co-opted to the board in March 2025. And there is a short election statement from all the candidates that are up for election and re-election in the meeting papers. So I'm just going to summarise them. So Amanze was co-opted to the board in March 2025. He brings a thoughtful, values-driven approach to his role. And as a Professor of Accounting and a Fellow of the ACCA, Amanze offers deep expertise in governance, risk and financial oversight. He also has significant non-executive director experience across the housing and public sectors, supporting organisations through change and regulatory scrutiny. Amanze has expressed a strong commitment to member-led financial services and to helping Money Co-op grow responsibly and ethically. So Amanze is up for his first election. Robin Webster, who's up for re-election. So Robin has been a director since 2019 and chairs our Risk and Compliance Committee, whilst also serving on the Nominations and Reward Committee. Throughout his term, he's helped strengthen our risk management processes, ensuring members' funds are well protected and that our lending decisions remain responsible in an increasingly complex financial environment. Robin is a long-standing supporter of credit unions as a safe and fair alternative to high-cost lenders. He brings over 45 years of experience in banking and insurance, including 10 years at the Co-op Bank, and continues to serve as a non-exec director in the sector. Andrew Cheetle, who's also up for a re-election. And again, a brief summary just on Andy. So Andy's a qualified accountant with extensive experience in the financial services, operational resilience and risk management. Andy's worked for the sector for 30 years, including 12 years at the FCA and FSA. And since joining the board in 2022, Andy has contributed across the audit, risk and compliance, and nominations and reward committees. He brings a calm, analytical perspective and a clear commitment to improving financial well-being, particularly for those facing higher barriers to affordable credit. The board therefore proposes that the AGM elect Amanze and re-elect Robin and Andy Cheetle, each for a 3-year term. I now invite members to approve these elections. Jackie, over to you if you can go through the voting poll, please. Thank you.
Thank you. So the first one's for Andy. So we've got 81% of members that have voted, and it's a majority yes to approve the election. Are you happy for that vote to close? Are we happy for that vote to close? Yeah.
Sorry, Jackie, I was on mute then. Yes, I'm happy for that to close.
I saw you nod. The next poll is for Robin. Again, we've got the same number, 87% members that voted in the majority yes to elect Robin. Happy for that vote to close?
Yes, I'm happy for that.
And the last one is Fernandez. We've got the 88% members voted. So you're happy for that to vote to close, the majority yes again?
Yes. That's great. Thank you, members. Thanks for all your votes. And thanks, Jackie. So that concludes this. So that concludes this agenda point, and it's back to David for the next agenda item. Or Lisa.
Yeah. Thanks, Nisha. Thank you. Then we're moving on to the lottery report. We have a credit union lottery, which is run by as a separate organisation called Friends of the Co-op Credit Union, and that's a regulatory requirement to keep it separate. So the financial statement for the lottery, they're provided in the meeting pack where you can upload them from the web page. I don't think there's any votes involved in this section, is there, Jackie? So we can move on. Unless there's any questions. Okay, great. So moving on to the Graham Southall Award. So the Graham Southall Award. Graham Southall was our founding secretary of the credit union, and this award carries his name in recognition of his pioneering role in establishing and shaping the organisation we're so proud of today. Each year at the AGM, we present this award to honour outstanding voluntary service, commitment or support for the credit union movement. This year, we're delighted to recognise someone whose contribution has been truly exceptional. Let's move on. Let's move the slide. Thank you. So we want to express our heartfelt thanks to our board chair, David Fowle, for his dedication and leadership over the past 9 years. As a volunteer, David has given his time and energy and expertise with unwavering commitment, guiding our credit union through a period of significant growth and transformation. During his tenure, our membership has expanded substantially, and we're now consistently lending to more than 2,000 people every year. Under David's leadership, we've also made major strides in our digital capabilities. We've developed a new website and online services that stand confidently alongside those of much larger organisations. And when it came to developing our new brand identity, the Money Co-op, David's marketing background was invaluable. He didn't hesitate to get stuck in, working side by side with our creative agency and our marketing manager, Mel, bringing real energy and enthusiasm to the process. His hands-on approach has helped shape a brand identity that feels true to who we are and where we're heading as a credit union. And David's also provided steady, visible leadership throughout our first merger negotiations, guiding the board with clarity, calm judgment, and a strong focus on what would serve our members best. I'd now like to share some words from one of the credit union's founding directors, Chris Smith. And thank you, Chris, for this. What a wonderful man David is. Firstly, I lied through my teeth when I asked him to join the board of the credit union. I told him it will probably mean about an hour a week commitment. The credit union is now a much stronger and vibrant business as a result of his thoughtfulness and patience. David has been a wonderful resource along with excellent governance as a chair and leader. His quiet knowledge and skill with systems, banking, marketing and costings would have cost a fortune if the credit union had brought such resource in. David was always available to employees and board members, and his enormous passion for fairness and ethical lending will be a significant milestone in the credit union's history. Great changes face the credit union, and it's a shame the credit union's own governance rules eliminate him from giving another 9 years. Future directors will be standing on the shoulders of giants such as David Fowles. So David, your contribution has shaped who we are today and set us up strongly for the future, and so it's with deep appreciation that we present you with the Graham Southall Award. And with that, I'll hand back over to you to close your last AGM as chair.
Thank you very much. I'm more than touched. Thank you, thank you, Chris, and everyone. Thank you. All right.
There's a lot of messages coming through, David. Just
there are. I can see them coming up. Yeah.
Good.
Thanks. But I wrote that terms of office rule, and I mean, Chris was one of the, was the first to go alongside David Dickman, another stalwart of the credit union, and I'm the next one. I can't believe it's 9 years that have flown past, and I've loved every minute of working with everybody. Thank you. So does that bring us to any other business? I think is now on the
business. Yes.
It's just
so,
that.
yeah.
Is there any other business? Anybody sticking their hand up or writing a question down? Jackie?
I'll just check the hands. Don't think I'll like say it's just the messages that are coming through. Just double check. No, I can't see anybody, David.
No. Okay. In that case, we'll draw the meeting to a close. Thank you. See you all around sometime.
I'm sure we will.
Cheers. Yeah. Bye-bye.
Thank you, everybody. Have a good afternoon.